Hello, everyone. This is Martin, and the weather is heating up here in the TO region, which stands for Toronto. This is for any of those viewers who are outside of the GTA and some of my new subscribers. It's pretty hot in here, over 90 degrees or over 35 Celsius. The trading is heating up as well. I believe this week is going to be some really good trading opportunities. Market direction seems to be a lot clearer this week for some of the major pairs. And just to give you an idea, the currencies that seem to be trending higher are the Japanese yen, the Swiss franc, and the USD. Trending lower, or seems to be trending lower, would be the Australian dollar and the CAD, which is the Canadian dollar. And that goes back from the last 3 or 4 days, carrying on hopefully into this week. When I say trending higher, trending lower, when a currency is trending higher, we're talking about gaining strength. When a currency is trending lower, we're talking about losing strength. In this case, losing strength are the Australian and Canadian dollars. Trending higher or gaining strength are the Japanese yen, Swiss franc, and USD. So one of the things that we're going to do is again look at the idea of trading strong against the weak. And near the end of this video, we'll go into the pairs that I'm also considering and looking at. So let's get started with the very first pair. And you can see in front of you, we have the Euro USD weekly chart. Overall, I see this pair trending lower. You can see the last 3 weeks, we had black bearish candles. Um, and what we want to do is switch to the daily chart. This gives you a lot more clarity. Okay, so this is the daily chart. You can see with the close of the previous Friday, right here at the red vertical line, we had one kind of a bullish day, and then with this candle right here, and this was the Tuesday trading, like this white candle is the Sunday Monday. Here's Tuesday. We broke this trend line, showing strength by the sellers coming in. Sellers keep control. The next day we had a doji. The next day again, kind of a doji. Not much going on there. And then finally the sellers took it down again on Friday. So I expect this pair to go down much lower and to at least here, but most likely to this. The next support area is right here. So what you want to do is take a sell trade below the low of this candle. You can see right there. Let's just quickly take a look at it. So you can take a sell trade, the breakout below 109.55. So let's say if a candle breaks out below 109.50, then price should definitely be going down. You can see the MACD, the histo bars are below the zero as well. Price here, you notice with the last week, price closed well below the 200. This is the red dash line, so it looks like price will be heading down a little bit lower. Okay, and the British pound weekly is next right here. You can see that. Um, this one, we're going sideways. This one's kind of a sticky pair to trade right now. There's a lot of thought around the world that this pair is actually going to go higher. That British pound is going to gain some more strength after the Brexit vote, which was right here on this weekly candle. You can see that right here. And price seems to be going sideways. So this is kind of a wait and see situation. Now the weekly candle was bearish, but to give us some more clarity, let's take a look here at the daily. So you can see the sideways movement. I'm going to just draw in a couple of support and resistance areas. Okay, right there, and on top, let's do the resistance. Resistance, you'd be looking at. Actually, I'm going to just take that down Well, that's actually resistance right there. You can see the highs on these daily candles are becoming are getting lower. However, we're stuck here at the support zone. So for the sellers to really take control, what you want to do is take a look for a candle close below, and I'm actually going to just change that to a wee bit. Okay, do you see this candle right here? This is a huge up candle. This candle defines where the buyers came in. Okay, so this is kind of the dominant candle right here. So below that would be the entry area. Okay, just to let you know, because price may come down a wee bit and then bounce up again. Okay, so what we're looking for is a breakout close below 129.70. So let's say 129.60. We're looking for a close or breakout below 129.60. And if price does that, it's going to go a ways because the next support area is right down here. And that is a huge 1,200 pips away. However, I have a feeling that price is going to get stuck around this support zone and may go up higher again. So again, it's a wait and see situation. So either you can wait for a sell breakout below this area or above the resistance above this swing high right here. And if it breaks out higher, that's going to present an amazing opportunity again, even though it's a counter trend, but or a pullback, but good for at least 350, 400 pips or even higher. Okay, so next we go to the Australian USD. Again, this is the weekly chart. Okay, you can see here on the weekly chart, we had a huge bearish engulfing candle, which kind of lets us know that the sellers are in control. Price, even though price has come down to a 21, price most likely will come down much further to this area right here. This is the weekly chart. Again, take a look back here when there was a bearish engulfing candle right here, then another huge candle down, went right through the moving averages, and finally came and even rested below the 50 SMA. So let's switch to the daily chart. I believe this is trending lower. You can either take a sell trade right now and have your stop loss just above this area. So this is kind of a swing high. You see, conservative is really here, but your stop loss is way too far for that. I would probably just say your stop loss could be in this area right here. Um, and expect price to come down to at least a 50. So there's room for at least, well, another 40, 50 pips in the short term. However, it may come down all the way, may bounce up a little bit here, go sideways, and then come right through down to the 200 and this support zone, which is I have drawn that in for you. So, okay, so that's the idea there. And I believe we are looking at this price going down lower. You can see the histobars and the MACD showing that the uptrend is losing steam and the price is ready to roll over down further. Okay, so that's what I see there. And now we go to the New Zealand USD. Here's the weekly chart. Okay, you can see that prices come down with two major bearish candles over the last couple of weeks. Actually, quite a big movement. We're looking at well, close to 300 pips, and prices right now stuck or at the support here. Now, remember, this is the weekly. We will switch to the daily charts in just a second. It's come down to the 21. And so we are in a pullback phase. By that we mean price you see since here. Take a look to the left. Starting here, price came down and then reversed, came back down, up, and with this break above the 50, we are now in an uptrend officially. We're still in an uptrend. The highs are higher than the previous highs. the lows are higher than the previous lows. However, so right now we're in an uptrend. Price went above the 100, but price came right back down again. So this, with these two black bearish candles, that's what we're called, or we're calling that a pullback phase, or price is retracing. Where exactly, we don't know. What we may want to do is go down to the daily chart as always, and you can see I've clearly drawn that in. So prices come down to the 50. Okay, this is the daily chart, and this is where you kind of have to have some patience. You want to wait and see what happens. Price could come back lower all the way down to this next support zone, and what you can do is wait for a breakout close below the 169. Let's take a look. 169.80. Okay, actually, what you want to do is 69.50. Okay, 69.50. You're looking for a breakout below 69.50, and if it does, then the price is going to come down either to here or the open zone. The next major open space is right down here. Take a look again to this major candle, bullish candle, where the buyers came in, emphatically taking out the sellers. Price not only went up quite a ways, but also closed above the 50. And from that point on, we had the uptrend was intact. And now it looks like if price comes down lower, the uptrend now will be reversing and coming back down to this previous swing low again here. Well, first to here and then down to here. But so this is what I see here. What you want to do is wait and see if price comes down, and I'm going to do something, and price bounces off of here. Okay, then look for one good bullish candle, which breaks the trend line right here. Okay, and you could look at a buying opportunity, uh, indicating that the uptrend is still intact. However, if price breaks below the support, you can look for either a breakout, okay, which is breakout down toward this area. It might come down to here, go sideways a little bit, and then down. Or you wait for a breakout, then wait for a retrace back up to the previous support, which is now resistance, right? And then what you want to do is look for bearish evidence that way. Um, so price may break down below the support area, below the 50. Price may go back to retest the area, which is now new resistance, and then come back down. So there's a number of ways to play that. Again, you want to exercise a little bit of patience on this one and see if price bounces off and goes higher, then we're looking for buy trade, or price goes lower, and then now you're looking for sell trade. Take a look at the histo bars. Histo bars are declining quite rapidly, meaning the uptrend has been, the momentum of the uptrend is completely depleting. Sellers are certainly in control. Okay, now we get to the USCAD, and you can see right away this is the weekly chart, but price is basically going sideways. However, I have a bias to the upside. It's not that clear here on the weekly chart, although on the weekly we had a good bullish engulfing candle. Let me just zoom that in. Do you see that right there? This is a huge bullish engulfing candle, completely engulfs the previous black bearish candle. So we're now at the on the weekly chart, we are at resistance. However, I expect price to break through and go much higher, or go to at least this area, the 50. On the weekly, you can see there's still room for about 150, 180 pips to go higher. Okay. Now, for clarity, let's go to the daily chart. Okay. Can you see that right here? So on Friday's close, price actually broke above the previous swing high, which is right here, indicating that buyers are really strong. They want to push price higher, and the 200, you can see that with the dashed line, acts as a magnet. Price almost always is attracted right, or is drawn right to the 200. So I do see price breaking this major resistance area. You can see one touch, two touch, three touch, fourth touch. Price may come down a wee bit, but I expect price to go much higher. And if it does, you can either look for a breakout, because I did say wait first for evidence, but if it's a breakout, then you're looking for breakout above 131.80, I believe it is. Let's just take a look at my notes. And yeah, 131.90 actually. Okay. I'd be looking for a breakout 131.90. I know it's close to the next major round number, but I believe if price is going to go higher, it's going to go much higher to at least this area right here. Okay, let's switch down to the lower 4-hour chart. You can see on the 4-hour charts, and I did this purposely, show you the on the last 4-hour candle, it retraced. So we had a huge bullish candle, and you can, the other idea is you can look for a retracement back to this support zone. Okay, see where the buyers came in right here with this big white bullish candle. That indicates where the battle was won by the buyers. Sellers tried to take it down further. Buyers came in, pushed price right back up. Sellers are down, have with the last 4-hour candle managed to push price down just a wee bit. But this is, if you want to use the H4 charts for better entry, that would be a good idea. You might also want to place a what's called a buy limit order right around there. Okay, so we're looking for a buy limit. And actually, you can do this in almost two parts. The first buy limit order could be, let's say, around the 131.00 area. The next one, 130.80 area, around the 131.80. Um, you know, so in two parts, two small lots. If price comes down and bounces up, you're good to go. If price comes down even further and bounces up, you're good to go with the lower buy limit. And obviously, if price goes higher, you'll have two trades open, both going higher. Okay, so there's just a wee bit of a tip. If you're not too sure, you can always place a small buy limit order around here, another small buy limit order around here. So split your trades into two. And I believe, like I said, my bias is to the upside on this one. Okay, now we get to the US Swiss franc. Let's take a look. The weekly chart is going sideways. However, I have a bias to the upside, so I'm looking for buy for buy trades where I've drawn in a upper trend line. You can see that right here. And to get some further clarity, let's go to the daily chart. So you can see price over the last 1, 2, 3 days last week kind of went up, down, up. There's a huge battle going on between the buyers and sellers. We're stuck at this trend line, and if you want to be really uh, you could draw it there. However, that's fine. There's one touch, two touch. Uh, all of these three daily candles were rejected by the sellers. So sellers are still in control. And until price is pushed back by the buyers above this area, then you're good to go for to at least the previous swing high, but most likely all the way up to here for at least 9,500 pips. Okay, so that's what we're watching for. The histo bars above zero, still indicating strength on the buyer's side. The moving averages are pretty well looking pretty good on the daily chart. Here's the 50. The 21 is above the 50. The 8 here is above the 21, so and above the 100 as well. So there's just a struggle going on here at resistance. I expect price to go higher, so you can look for a breakout above the 99.10 area, I believe. 99.10 would be my breakout area. A close above 99.10 and then hopefully good to go to the upside. Your stop loss would be down here just below the 8, or it could be below previous low right here, but that should be sufficient. You're still looking at a like 70, 80 pip stop loss. But again, trade with small lot sizes if you're trading end of day. Most of these charts I'm showing you are for end of day trading. These are the daily charts, not necessarily for intraday, but again, based on my information as to where trend direction is heading, you can certainly use the information I'm giving you for of trend direction to give you an idea of where to trade during the daytime if you've got only a few hours during the daytime hours. So again, my bias is to the upside on that one. Now we quickly jump to the USJP, our last major pair. And you can see over this weekly chart over the last well, number of weeks since the beginning of this year, January, we've basically been in a major downtrend. Take a look how beautiful these moving averages are. They're all, here's the 50, here's the 21, here's the 8, and this is a complete, from here, this is a complete reversal after this huge uptrend back over here. So the uptrend actually, let me minimize that. You can see the uptrend started right back here in July of 2012. So since 2012, we've been going higher, higher, higher. You can see how beautiful that is. Moving averages are all in the correct order. 100 above the 200. So we got 200, 100, 50, 21, 8, plenty of opportunity to get in. And now you can see this swing low right here. Okay, we broke that with this swing low. Well, that's at the same level, but once price broke the 100, the 100, we were in a downtrend. So major downtrend. Let's go to the daily chart, and price is now at the top end of this channel. So okay, when I talk about a channel, this is kind of a bearish channel. Let's just um, draw in the touches on the highs here. Here's the first major touch, second touch, third touch. You can see that. So prices come right to here, okay? And because price hit the resistance area, we're in a pullback. So what we want to do is really wait and decide what we're going to do. We're waiting for better evidence. So one of the things, obviously, and take a look here at the histobars. Okay, let me just now zoom in just a wee bit. See, the histobars are above the 0 level, indicating that there's a reversal in trend direction. Trend direction is to the upside. Well, the strength is to the upside anyways, and we're waiting for a breakout. In this case, we're waiting for a breakout. And if you want to be really cheeky, if you want to try to sneak in there, you see this little white candle? So after a bearish down day on the Friday, we had a little bit of a bullish candle, which kind of stuck at the 50. So we need to get above the 50, a close above the 50. But if you want to sneak in, and let's say anticipate price to go further to the upside, right above the high of this little candle. So we're talking about 106. Let's take a look here. 106.50. So a breakout above 106.50, and that might be good for quite a number of pips. Okay, so breakout above 106.50. It's going to be good for, well, at least 50, 60 pips to the upside. And if it breaks this area, it's going to go toward the 100 here. So are we anticipating further upside movement? Well, my bias is to the upside. And you can see the moving averages have all crossed over. The 8 is crossed over above the 21. So we are in a pullback, but price may just go down sideways a little bit. Let's look at the H4 chart. You can see prices now, and I've drawn this in for you, the support zone right here. Okay, so price after this long sustained trend to the upside, this is the 4-hour chart, we've come back down. We are stuck at support. Price is still above the 50. Okay, price is above 50, and what's really good is price is above the 200. That's good. And so we're looking, do you see that? We're looking for a breakout either above here which may take us to at least a swing high, or very conservative, waiting for a breakout above this area, the previous swing high. This is for the conservative traders. We're looking for a breakout above 107.50. Okay, so conservative breakout, aggressive breakout, but how about this? How about a buy limit order back down? So if price comes back down here, placing a buy limit order, and maybe just a small one at 105, let's say 105.55, 105.60. So if price comes back down, bounces up to at least the trend line here, that might be good on a short term, 100 pips right there. So uh, several different ideas for you. You have to decide what's good for your trading style. You know, are you an aggressive trader? Are you a conservative trader? I've given you 3 different ideas here. So it really depends up to you. Now, really quickly, we're going to go to the oil chart right here, and I want to go down to the daily. This is the daily chart. Oil seems to be trending lower, and that's why the Canadian dollar is really weak. Remember, at the beginning of this video, I did say Canadian dollar is weak, the Japanese yen is strong, and so here's an opportunity if you've never traded this, the Western Texas um, oil here, then you could take a sell trade, and there's a lot of open space to the 200 right here, thinking that price may go down much lower. So that's something that you could look at. And remember, at the beginning of the video, I said trading weak against strong or strong against weak. In this case, we're looking at the Canadian Japanese yen pair. It's the CAD JPY. Take a look at this 1 hour chart. This is the 1 hour chart. Look how beautiful the moving averages are. The 8 below the 21, below the 50. The 50 has just crossed the 200. Okay, and as price continues sideways or going down further, the 50 is going to fall down along in line with the 8 and 21. So now here's a bounce, okay? And take a look at this. So if you are an intraday trader, okay, here's an idea. Draw the trend line. You're looking for a break below here. This is the H1 chart. Go down to the 15-minute. Okay, take a look. Price breaks down below here. Good to go for a good sell opportunity, which would go to at least here intraday or to about here. So good for 22 pips. Go switch down to the 5-minute chart. Same thing. Now you're looking for even an earlier entry, okay? And you can take a look. You can take an entry right about here. So histobars are getting smaller, showing that there is weakness in the uptrend here. Well, this is a pullback. So again, looking at the um, this is a pullback phase. Okay, so you have to understand your phases. Price, we're in a downtrend, pulled back, went down further, which is what trend trading is all about. Again, waiting for a pullback, waiting for a break of the trend line, the counter trend line right here, and looking for a sell trade to the downside. And the final pair, strong against weak, is the Australian Japanese yen, almost identical to the Canadian Japanese yen, where the Australian dollar is the weak one, the Japanese yen is strong. And again, look at the moving averages. This is even better. Look how beautiful the averages are. This is called a well-defined trend, okay? This is the 1 hour chart, okay? And we are in a pullback on the daily. You can see on the 4 hour chart, uh, on the hourly chart, you can see again, we're in price is coming back down. Price is going back up in a pullback, and we're looking for a sell trade below here. So breakout sell trade here, and you've got some way to go. Again, what you can do, and actually with that last candle, it almost broke. I believe it broke the trend line. See there? What we've done is a valley, 2 touches, 2 valleys, draw on the trend line. Let's go to the 15-minute. You can see with this candle here on the 15-minute, we have broken the trend line. Good to go for a sell trade, I would say right there. or you can wait for a little bit of a wee pullback. But I believe price is eventually going to come down to at least uh, this area right here. Okay, so there is room for at least 13, 15 pips. Again, this is for intraday. However, on the daily chart, same thing. See where price is right now? For the daily, to take a trade on the daily chart, you want to wait for a break of the trend line on the daily chart. You can see that right here. So if price breaks below here, below the 50, below here, good to go. This is going to give you some major pips, and at least to the previous swing low, we're looking for 287 pips to the previous swing low. So that's pretty darn good. Okay, so those are two other pairs I'm looking at. They're called cross pairs. Happy trading this week. If you need to contact me, you can do so by email. And I also look forward to meeting many of you this Monday evening at our monthly Mississauga FX meeting. Okay, take care, everyone. Happy trading. We'll talk to you again soon. Bye for now.